Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. And well, it's looking like a very weak end to the week, Santo, with benchmark indices nursing more than 1% cut at this point of time. Nifty and Sensex look set to end lower for the third consecutive session at this moment. And it's the capitulation in the mid-cap and small-cap, Santo, that has really intrigued me, because this was one space that has really seen a lot of outperformance over the past, few weeks and months. And it just seems like today somehow just investors woke up and decided that we need to book our profits at this point of time. So clearly, there has been a little bit of a shift in sentiment in the broader market. And apart from that, if you look at the volatility gauge as well, the India VIX, that surged nearly 7%, hinting clearly that bearish positions are being built quite aggressively at this point of time.
Well, CJ, the steep fall in mid-cap and small-cap stocks shouldn't come as a big surprise. Yes, the suddenness of it always comes as a surprise, and that's what the markets is all about,
right? The quantum of it is very interesting. If you look at the Nifty small cap and mid cap, I think they're down more than 2%, actually underperforming the Nifty 50 for the first time in that sense in many sessions.
Because CJ, what happens also is that you have a lot of leverage positions in mid and small cap, which tend to get unwound when there is relentless pressure on the front line. In theory, one can argue that whatever happens in the front line stocks is not really our concern, but that's not the way it works. The moment some kind of weakness and panic sets in, you have this leverage positions getting unwound, and that in turn then sets off a vicious cycle where there is more selling followed by margin calls and all that, and then finally you see the market coming off very sharply. That said, I would still say, CJ, it's a little too early to call for a trend reversal. Now my argument is exactly the opposite of what I was making earlier, that you have a case of the market going high and then coming off very sharply, but in this case twice market has come off sharply and then rallied quite a bit. In fact, sitting on a near 3,000 point rally on the Nifty. So it is, I would say, it is still too early to call for a trend reversal at this point in time. Yes, some bit of hot money that is likely to move out, because this money typically that chases returns, and when you see some pressure, this money is the first to move out, and probably that is what is causing the pressure at this point. And the overall narrative, CJ, which is that India is still the cleanest shirt in the dirty laundry. I think that still holds for the time being. That hasn't really changed. We have not seen any major worrying macro numbers so far, and whatever is negative or whatever is not all that rosy, that's fairly known at this point in time. So
I think, Santo, I think probably this volatility is likely to continue, given the fact that on Thursday next week, of course, you have the Fed's monetary policy outcome coming, and that is, of course, the major event that the market has been gearing up for the past 1.5 months. Now, there is a good level of uncertainty around that as well, and I think this is very natural, because you saw that, prior to the previous meeting as well, that a week prior to that meeting, the outcome of that meeting, we had high volatility in the market, and then suddenly once the meeting was out of the way, market then restarted its own trajectory. And maybe that the situation will repeat itself. We will have to wait and see. But clearly, volatility will remain the name of the game the next.
Well, that is that's bound to be the case. We've seen that in the last almost 4 or 5 months, and that is likely to continue for some more time. But if you're holding on to quality stocks, probably, then I would say that the corrections always give you an opportunity to pick up something more on the cheap.
Well, talking of stocks, let's quickly now move on to some of the stocks that were buzzing in trade today, starting off with a banking name again, Santo.
Yes, Bandhan Bank, and now this bank has been one of the laggards in this segment, and as CJ will say here, for good reasons. It's the MFI part of its portfolio has not been performing well. The Q1 numbers were pretty much a mixed bag. Some expectations were met, but as far as the MFI side of the business goes, that still is continuing to show some bit of pressure. And then you had the Assam floods also. That is one big dampener that has serious implications for the ability of the borrowers to repay, and that could weigh on the asset quality for some time, and which is why you've seen the stock underperforming for quite some time. Now, the management is hopeful and that things will start looking up from the second half of this fiscal, and according to MK, the return on assets, which was quite low at almost 0.1%, that is likely to see a significant improvement in this current fiscal, and that's also because of lower loan loss provisions
going ahead.
Yeah, and this, given that stock has underperformed very clearly, a lot of negatives have already been baked into the price at this point in time. You probably, if you're looking for something where the valuations are reasonable and of course, it's always a risk in that sense. You always, if you want to make those big returns, you always have to take those risks. I think Bandhan Bank would be one such stock here.
Well, Santo, I think, after the Q1 results, it seemed like the market had finally moved on from that asset quality issue, and there seemed to be a lot of consensus emerging within the market that Bandhan Bank could be a turnaround story going ahead. But clearly, if you look at the past 3 to 6 months performance, the underperformance shows that investors still lack the confidence in the company. Overall, it has been underperforming the Nifty Bank and a lot of its individual constituents. And as you rightly mentioned, Assam flood is clearly a big issue going ahead, and that is going to raise question marks over the asset quality once more, which had seemed to be subsided after the first quarter earnings. Overall, I think analysts had indicated even after the first quarter earnings that Q2 will still see some bit of stress in the balance sheet, but it is the Q3 and Q4 onwards that they were expecting some asset quality improvement. But because of the floods now in Assam, which is a key geography for Bandhan Bank, we will have to wait and see how that situation develops when the second quarter earnings come out for the company. Well, the next stock on my radar today is a microcap company. I'll be talking about two microcap stocks, and this is, I think, Santo one for the long term for me, because Shakti Pumps is one story I think that could really benefit from the rapid shift that we are seeing towards solar pumps in the Indian agricultural market at this point of time. The government itself is pushing this initiative in order to make farmers utilize more solar intensive or solar based water pumps. Also, solar-based water pumps tend to be more helpful in a region like India, where groundwater levels have been receding quite sharply for many decades. And according to Edelweiss Securities, who recently visited the facilities and plants and manufacturing area of the company, they believe that sustainable solar pumps or submersible solar pumps, I beg your pardon, is a huge potential for the company, and going ahead, this could really compound earnings for the company. The company itself is also diversifying into EV component, making, manufacturing. They believe that they have the expertise at this point of time to probably supply a lot of components to three-wheeler EV manufacturers out there. And overall, they have guided for about a 25 to 30% sort of growth in earnings over the next 2 to 3 years. So clearly, the next 3 years look very strong for the company. And at this point of time, if you look at the risk, reward and valuation, they seem to be very favorable, Santo.
Well, definitely fundamental wise, I think CJ, you've made some pretty good points there. My only concern is this. If you look at the margins of the companies over the last many quarters, they've been very erratic, right? Very, very
that is
erratic.
Something that happens with a small company, right?
Yes, but you're seeing margins in the range of between 4% to almost 50% in some quarters.
Yeah.
That is, if I look at the top line growth over the last many years, they've been pretty much consistent, around 22% growth over the last 5 years. But if you look at the net profit growth, the earnings part, that is where I would be a little skeptical. Typically, of course, in microcap stocks, it's a case of you risk big, you get big returns.
Absolutely.
In this case, I think consistency of earnings is something which seems to be missing. It's not that the earnings are too small or the market is valuing the story very highly, but I just can't figure out why there is so much volatility in the
I think Santo, it also has to do with the fact that the past 2.5, 3 years has seen very rapid highs and lows as far as raw material prices are concerned. For any company, any company out there in India at this point of time, raw material prices have been very volatile. And I think for a small cap company like Shakti Pumps, generally you don't have that great inventory management system. So sometimes you are holding high cost inventory, and then in other periods you are holding low cost inventory, and therefore your profitability or your margins also keep on fluctuating accordingly. I think the company would hope that with the recent decline in raw material prices, they would be able to bring the margins in an upward trajectory over the next coming quarters. But I think overall, because it is a small cap company, the focus largely will be on earnings growth, because investors know that this sort of erratic journey is part of the entire process.
This last 2 years is when its top line has really taken off in a big way. It's almost doubled, CJ.
Yes, that is, I think, thanks to the government's initiative. I think the government, the only catch with Shakti Pumps is that it depends very heavily on government tenders. So if anything goes wrong there, then of course the company could be in for a bit of a hard time. But as long as government tendering keeps on coming, and clearly they are expecting almost 10 lakh pump order going ahead. They've already got the tenders have been out for almost 4.7 lakh pumps. The next round of tendering is expected to have about 10 lakh pumps, and at this point of time, Shakti Pump has a market share of somewhere around 30 to 35% overall. So clearly, I think there is enough demand visibility going ahead for the company.
Yes, and at current valuations, it doesn't seem to be too demanding also. Well, next stock on my watch list is Ramco Cement. Now, again, cement stock. Yes, cement stocks in general have been the flavor of the season.
Yeah, at least the past 2 weeks, clearly.
2 weeks clearly, and Ramco Cement again is been among one of the best performers. But here again, CJ, I would again be a little cautious at this point in time. And for one, I can already see that if you in the NSE's stock lending and borrowing window, already huge short positions are being built up.
Very interesting.
In the stock at this point in time. That's one part. And the second part is that the huge fuel expenses, that's been one of the big reasons for the sharp erosion in margin. Now, that's not going to go away in a hurry. In the second quarter also, you're going to see some effects of that, simply because cement companies, they have a big inventory of fuel, especially to guard against fluctuation prices, although in this time it will tend to work against them. And the demand, I think that is where the market is really hoping that, once the monsoon ends, you will have again demand coming back in full strength, and I wouldn't be too sure of that at this point in time.
But Santo, I really find it really surprising that market is so bearish, or at least there are bears out there who are trying to capitalize on an opportunity that probably the stock has run up too much. Because if you look at it from a longer time horizon, Ramco Cement has really not performed that well yet. Yes, there are concerns that probably if the Adani Group does go aggressively in, players like Ramco Cement will be the most vulnerable, because they are still smaller in size compared to a Shree Cement or a Ultratech out there. But for me, I think overall in the second half, you could expect a decent amount of recovery in volumes as far as Ramco is concerned. This is true for the entire cement sector, not only for Ramco. And overall, individually, Ramco is also looking to reduce its debt levels as well. Yes, they have a decent amount of debt, which is not of a concern so far, but the company has indicated, in previous earnings call, that they are really concertedly working towards bringing down their debt on the balance sheet, and that can only mean good things as far as the health of the balance sheet is concerned going ahead. Overall, you mentioned rightly that the cost environment has been a struggle for a lot of cement companies, especially for Ramco. But I think given that sequentially we have seen, fuel costs come down for a lot of cement companies, and this is something that analysts are expecting to continue into the third quarter and fourth quarter as well, especially with crude oil prices now sitting at almost 6-month low. I think there the concern should be alleviated, provided the company's margins show some amount of recovery in the September quarter, Santo. But the last stock on my radar today is from the hospital space, and this is one name in the hospital space that has largely been ignored by investors, and this is Healthcare Global. Now, HCG, it seems, is on a cusp of a turnaround, Santo. I mean, the company for the past 6 years has been in an expansion mode, and therefore its profitability had not been really up to the scratch compared to, say, a Fortis or an Apollo Hospitals out there. So clearly it was struggling to garner traction. But at this point of time, given that that expansion of network is done, there is a belief among analysts that probably margins will now start looking quite well. Also, as the new assets are sweated out, as the new hospitals become more and more mature, you see that generally in the hospital industry, margins also tend to improve as the hospital's age gets older. Overall, if you look at it from a thematic point of view, HCG is known for its oncology treatment, and there is at this point of time, unfortunately, a very sharp rise or expected rise in oncology cases in India, and that is where a lot of analysts believe that HCG could benefit going ahead in terms of demand. And overall, Equirus Securities, they have come out with a long rating, basically, which is equivalent to a buy rating from their perspective, and they believe that there could be almost 159% upside in the stock over the next 3 years. So this will be one stock in the micro cap, in the small cap space, that investors should be really watching out for.
Well, I agree with most of your points, CJ, especially that lifestyle related diseases now are on the rise, and probably that is also a shape of things to come given our demographic make, and also the cultural
issues, of course, there are also there. Yeah, India does have the highest, one of the highest incidence of oncology cases in the world. So in that sense, I think that play on expansion of network is something that probably analysts are looking at.
So when you look at the numbers of Healthcare Global, one thing that stands out is that while the top line numbers have been a bit volatile, with inconsistent. The margin somehow has been pretty consistent at close to about 17%. So that's the only thing I can say in favor of HCG at this point in time. And with that, let's take a quick check on the markets. Once again, markets drifting closer to the day's low. The Nifty is down by almost 340 points.
Almost 2% down, Santo. It's been
it's been a brutal week, and we've seen selling across the sector. Especially banking stocks have taken a beating. We've also seen some heavy selling in IT stocks.
Yeah, I mean IT stocks are like 4%. Nifty IT is probably now down more than 10% for the week. If you look at the other sectors, Nifty PSU banks within the banking space, the state-owned lenders are clearly taking a beating. Also, I think which goes to show that high beta is suddenly it's become something that investors are running away from, because even Nifty Realty Index, the entire real estate capex theme has been talked about for the past 1 year, but clearly the Nifty Realty Index is also down about 3.6% at this point of time. And of course, the maximum amount of losses are coming in the mid cap and small cap space. The Nifty Mid Cap 100 down about 2.9%, 2.8%, 2.9% right now, and small cap index down about 2.5 to 6%. So clearly a pretty bad day for the market.
Well, looks like that. And with that, we move on to our next segment.
And
that is,
what did I miss, Santo?
Well, in case you missed it, CJ, we flagged it in the past also, and it will once again come to light that activity in NSE's SLB segment has really picked up in a huge way, and I was surprised by some of the names that are now figuring up on the list there. So if you look at the big names out there, Bharti Airtel, for instance, tops that list. It has about close to 3
a very contrarian
3 million shares of short positions created there. And look at the other names. Ramco Cement, 2.5 million shares. Bajaj Auto. Gujarat Gas is no surprise really, considering that overall outlook has been quite negative. ICICI Prudential Life. IRCTC, although you're seeing about a little over 1 million shares in short positions, it's almost come down very significantly. It used to be over 2 million shares just a couple.
I think that would be a positive in that sense. I think probably a lot of bears have given up the fact that OFS, which people have been waiting for the past 6 months, has really not come, and I think therefore you have seen pairing of position there. Bharti Airtel, I think, is a bit of a surprise given the fact that if you look at some of the analysts or the buy calls on the stock, it is clearly one of the most preferred stocks out there. But clearly the market feels that maybe the recent, if you look at the recent user addition pace for Bharti Airtel, that has been really slowing down, and maybe the market is sensing something that there is possibly potential for a little bit of de-rating on the stock. Maybe RI's aggressiveness with respect to the 5G plan, given that Bharti is not willing to spend as much as RI is going to spend. RI is dedicating almost rupees 2 lakh crore to the expansion of his 5G network. So that is something that maybe the market is playing at. Gujarat Gas, as you mentioned, is not a surprise given the fact that what has happened, the struggles at Morbi, which accounts for almost 50% of the volumes of Gujarat Gas. I think that is where a lot of investors are feeling that maybe earnings going ahead would be a struggle for Gujarat Gas.
Bajaj Finserv there.
I think Bajaj Finserv, Santo, is something that you also talked about the other day, that the split and the bonus probably ending.
Those shares are yet to be credited, and in the meantime, a lot of people have gone short. So towards the end of the settlement, you could see further pressure there as the futures, which are right now quoting at a discount to spot. Usually it's the other way around. When they converge, we've seen that in escorts also. Where
definitely.
there was the
back
huge
in March
discount.
And April, we did that.
And then towards the end of the settlement, you see a sharp sell-off in the stock.
Well, Santo, I think in defense of Bajaj Finserv, all that I can say, and the point I made earlier this week as well, is that from a long-term perspective, clearly this is one of the best plays you can get in the financial services industry at this point of time. And it will be I will be a little surprised if smart money does not take advantage of any sort of weakness that creeps into the stock going ahead.
Well, and with that, what do we have to look forward to?
Well, Santo, there is a lot happening next week, of course, today, but one important, US economic indicator that will come out is the Michigan Consumer Sentiment Index, and it will be very interesting to see how that pans out, because recently, all of the economic data that has come out in the US has tend to show that the US economy is still doing quite well. It's chugging along quite well, and therefore strengthening the case for the Fed to keep on raising interest rates, and therefore spooking equity investors who are hoping that the Fed will pause as soon as possible. Apart from that, of course, the big event would be next week with the US Federal Reserve's monetary policy outcome that will come on Wednesday evening there. So therefore Thursday, our markets will be reacting on Thursday morning, which will also be a weekly options expiry day. So you can really expect a lot of volatility there. And I mean, apart from that, there are no major events as such in terms of from an economic point of view. We are inching closer to the earnings season, definitely. Almost only 2 to 3 weeks left. So I think it will be very interesting how the next 2 to 3 weeks pan out for the market, Santo.
Well, yes, with that, it's a wrap on this edition of Markets with Santo and CJ. We hope you have a wonderful weekend. Thanks for watching, and please do post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live next week, Monday morning at 9 a.m. Till then, have a great weekend.